take the final intro.
That's our final speaker for today is John Walding, and very pleased to introduce him to you. He's a renowned financial expert, a New York Times best-selling author, and pioneering online commentator. He produces the Thoughts from the Front Line, which is an online kind of commentary. More than 1 million people signing up on this, but he has been frequently cited in the media. Of course, Financial Times, New York Times, the Daily Economist, as well as he has been a regular commentator at CNBC, DAPO, Bloomberg TV. He has done a lot of work in terms of the financial issues in the economy, but at the same time, he was a chief executive officer of the American Bureau of Economic Research, a publisher of investment newsletters and books. Many more about his bio, but it's a great pleasure to have you with us, John, today. And I hope you have a copy of your textbooks, of your book, so you can give me a free copy. Thank you.
I want to thank Dunk for inviting me. He and I are supposed to be writing a book on employment. He has written his part. Or his first draft of it. Now I'm now desperately trying to go through, and I'm finding out that employment is a lot more complicated than I thought, and I keep adding it. What was supposed to be a short book may not be that. What I'm going to do today is change my speech, simply because all the speakers in front of me have taken all my really great points. But I do want to make some comments, and then since we're running behind, if I finish up early, we'll invite other speakers back up and have a discussion, which might prove to be more thoughtful. The concept was to talk about global economic pressures on demographics. So let's look at what the global economic pressures are. There's positive pressures and there's negative pressures. We'll start with the negative pressures first, because most people think of me as a bear. I don't want to disabuse that thinking, but I would end up as an optimist to try to shock a few of you. By the way, how many of you read my letter? Yeah, that's most of you. The rest of you look around. It's a free letter. Get a clue. The main pressure, the global pressure, is the one we all know. It's the end of the debt super cycle. It's the end of the bubble in sovereign debt. Now, I view this as a very positive thing, because governments have misallocated trillions of dollars worth of capital for 20 years or so. And when this bubble bursts, governments will have to restructure, resize. It will not be fun while we're going through that restructuring. But at the end of it, we'll have trillions of dollars of capital to effectively and properly allocate. That will be a very, very bullish moment. The world will go, ooh, this is probably not a good thing to do. Hopefully we will not make the same mistake again for another 30 or 40 years. Europe is in the process of imploding in one of 2 or 3 forms. We don't know really what it's going to look like when it comes out. They simply have too much debt. They can't pay it back. Spain is now the current problem. The only way Spain can get out of this problem is for the rest of Europe to pull a lot of money together and give them 3 or 4 years, maybe 5. And at the same time, the European Central Bank will have to print a great deal of money over the protests of the German Bundesbank, which is toothless, because they have 2 votes out of 23. I mean, they sit and puff, all sorts of things in their German accent, and nobody's really paying attention. Really. I mean, it used to be the Bundesbank said this. Everybody, wow. But nobody votes that way. Nobody really cares what the Bundesbank thinks, except in a few central bank circles. Now, the Bundestag, on the other hand, their legislature, they have some teeth. Because there's a limit, they've set, as to what Germany will do to participate. And if you ignore the Bundesbank too long, you're going, there's a technical term we use in Texas, it's called, you're going to piss them off. You're going to really upset the Bundestag, and they're going to say, when Merkel comes and says, we need a little bit more money for our ESFS and our EMS and all these other things that they're going to create. The Bundestag may go, you know, this is really not a good idea. And we kind of headed up to here what we're going to guarantee. So that's it. No more guarantee on the ECB. This is our limit. The rest of you guys are on your own if you want to guarantee more of that debt. That'll be, you know, a not toothless tiger that can do pretty much what they like unless Merkel can tame them. She did the last time. Can she do it again? She can keep her coalition together. We found out that the Dutch in the last 2 days cannot. The French are getting ready to change because they don't like Sarkozy. So they're going to throw a fit, some 16-year-old teenage girl with an Italian and say, let's go to the socialists. They are not going to put us through austerity. They don't have a plan for growth, but they say that they want growth. So let's put the socialist in that wants to tax everybody at 75%. What a great plan for growth. It is a great plan for growth for London. Because that's where all the French entrepreneurs will. You want to go to a great French restaurant, go to London right now. That's where they're going. Italy has the same problems. Do you know why Europe has said that the real debt limit for a government is at 120% of debt to GDP? Is there some magical economic paper, some consensus among economic schools that 120% is the level of debt that you can go to before it's a problem? No. It's that Italy's at 120%. And if you said it was at 80%, that would mean Italy was a problem and the bond market would go crazy. So we're going to say it's 120%. If Italy had been at 140%, the number would have been 140. If it had been 100, the number would have been 100. By the way, when Italy goes to 128, the number will become 128. Spain is too big to save and too big to allow to fail. This is the pressure point on the EU. It is not clear to me from talking with leaders in the EU, from reading their works, from talking with people that have their ear, what they're going to do. The Europhiles want to create a fiscal union, something that looks more like the United States. The various government leaders say, no, not yet, whatever they want to say. You know, we don't want to do that. So it's a pressure point. People want to be European. The Germans want to be seen as part of the group. So the Spanish, so the French. But they've got to figure out how to deal with their debt. The United States has, according to the latest book by Scott Burns and his co-author, I'll think of his name in about a second, that's just come out, called The Coming Generation of Wars. It's a great book. $221 trillion worth of unfunded liabilities. That number keeps rising every year because we keep increasing the debt and we keep not funding our future liabilities. I was with Scott Burns last Friday night. He was talking about that. I said, Scott, I'm really not worried about $221 trillion. Doesn't bother me at all. I can look at that number square in the face, my hand doesn't move. And the reason it doesn't is because we'll never have to pay it. We simply cannot pay 221 trillion or 75 trillion or whatever the number is that you want to make up. The far more interesting question, and the one that makes me nervous, is what happens when we realize we can't pay it. When we get to that point, we go, damn, we're in trouble. Just like any family comes to the point that they realize their debt is more than their income. The bank has cut them off. Oh, we've got to do something. Now, my belief is in 2013, we either do something, we figure out how to deal with the deficit, or in 2014, the bond markets will be looking at Spain and then Italy. They'll be watching France become a problem. France will be the problem in 2014, 2015. We'll stop looking at Spain and go, oh my God, it'll be all France all the time. The French are in deep kimchi. Maybe we could say they're in deep foie gras. I mean, their debt to GDP is not so much, except that their banks are like 5 times their GDP. They loan money to everybody being all the other countries. That simply is not going to get repaid. French banks are too big to save, which is why Sarkozy kept demanding that we must all be in the bank problem together. Because otherwise, France was screwed. So he gave Merkel everything he wanted as long as we could get everybody, taxpayers, to cover the banks, which was what his bottom line negotiation had to be. When Holland comes in and he wants to change the fiscal compact, Merkel will look him straight in the eye and say, okay, monsieur, no problem. We're just going to kind of pull that United We Stand bank thing off the table. And Mr. Holland will go, oh, well, maybe not so fast. They've got very limited options. It's a very treacherous path if they want to be able to hold it together. I kind of think they'll try. They certainly want to, but they're going to have to go through a major restructure. That $221 trillion I talked about in future liabilities to the U.S., it's worse for France and Spain and most of developed Europe on a relative basis. And they have a worse problem is that they're already at 40 to 50% of taxes to GDP. They can't raise taxes anymore. They have a declining population. Their demographics are imploding, as we all learned here. So they have much fewer and less options. And they can't print money, unless the ECB does, which that could be one solution. But the Germans have to lose their Weimar dreams, kind of embrace their inner inflation. So that's a very serious global demographic pressure. I'm not quite as optimistic as Mr. Wilkinson about the Japanese. I think Japan is a bubble as a bug in search of a windshield. They are coming to the point within a few years where their savings rate will go negative. They started at 16% in 1990. They're down to probably 1% now. Their data is always a year and a half, 2 years old. It's very annoying. I mean, supposedly we get our data every 60, 90 days. I don't know why the Japanese can't keep up. But the trend is very clear. Sometime in the next few years, maybe next year, certainly not beyond 2014, their savings rate goes negative simply because they have old people who are willing to take their JGBs, their bonds, and turn them into yen so they can buy sushi and sake. And, the government will come to them and say, maybe you want to keep these bonds a little bit longer. There was a private poll done of the Mrs. Watanabes, and the Japanese were asked if the prime minister of the government came to you and said, would you be willing to hold your Japanese bonds longer if it was for the good of the country? The answer was, what percentage do you think?
It said yes.
It said yes.
Probably over 20%.
13. So much for Japanese solidarity. You know, they expect, after they've saved all their money, that they're going to be able to turn those bonds in and get cash. In the same way that all of my fellow baby boomers who have bled, struggled to put money into Social Security, damn well better get our money back because we paid into it. The fact that we're going to get more money back is immaterial. The fact that we're really kind of screwing the next generation, which is okay. That's the way it's time. We've been doing this for decades. Japan is going crazy, which we're going to have two large examples of developed worlds coming apart at the seams. Europe, one country at a time, and then Japan. Then we come to the U.S. And if we don't get our act together, I believe the bond market will come to the U.S., the bond vigilantes will come to the U.S. bond market and say, guys, we've seen this movie a couple times before. We know the ending, it's not very pretty. If you don't mind, we'd like to slip out at intermission. So rather than being able to go to 2016 or 2017 or 18 like we normally would think the U.S. could get to, like if we were Japan. I mean, we've got our own, we're the world's reserve currency, for Pete's sake. Bond markets, we go, you guys really aren't serious about dealing with this deficit thing. And then we'll have a crisis, and then we'll deal with it. Hopefully, we can be smart enough to recognize the disaster that it will be if we don't deal with it. Because the cuts we'll have to make and the taxes we have to increase will be far worse if we have to do it in the middle of a crisis. Ask the Japanese, ask the Greeks, ask the Spanish, get ready to ask the Italians and the French and so on. I've talked with the leadership in Congress on both sides, Democrats, Harry Rouse with Harry Reid's, his chief of staff here a month ago, who's now my new best friend. Spoke with Boehner for 3 hours 6 months ago. Most of the leadership. I texted with a couple of presidential candidates who unfortunately did not win. They get the problem. They really do get the problem. They just can't talk about it. And they, I was with 10 senators here 6 months ago, and 30-minute meeting that lasted 90 minutes. They really gave me a lot of time. Lieberman at the end says, "Okay, let's say we buy this. We get it." By the way, I was impressed with Lieberman. God, why couldn't he be running for president? For Democrat, I like this guy. He said, "Okay, let's see if we do this. How do we talk the rest of the Senate into buying into this? You're asking for a lot of pain," because I told them, if we solve it, we can't solve it all at once. That's a depression. The Tea Party senators did not like that. When I demonstrated to them that if we did what you want to do, it throws us into depression and unemployment goes to 20% and all of you get kicked out. The Democrats didn't like what I told them when I said if we ignore it, we have a crisis, then we have depression. So we have to deal with it in front. We have to deal with it over time. 1 to 1.5% of GDP every year for 4 or 5 years running, which is going to put a big drag on growth for GDP in the U.S. just as the time where boomers are beginning to retire and our young people need to get employed. Several people talked about the fact that boomers are not quitting. We're not retiring. I don't even, I know you're retiring, but are you going to quit? No, we don't quit. Hell, I'm only 62 years old. Richard Russell, who's at 87 and still writing, that's my hero. Married a girl 30 years younger than he did, too. I like this guy. My generation, the boomer generation, is going to be the first generation to break the deal that we've had since the 30s. Every other generation agreed to die on a statistically definable path. We are not going to die on time. Let's get to the good news. We are going to be, as a culture and as a world, catastrophically successful. And I say that in two terms, because we're going to live longer. You want to go long life insurance companies and short annuities. I'm invested in a company now, and there's a half a dozen other companies that are private companies, there's a half a dozen other companies that I know because I'm sort of paying attention to this, that within 1 year we'll be testing a cure for all cancers. We'll be in human trials. It's worked in 25, 30 mouse studies, NCIs all over this. Former head of the FDA has joined the board. Think about it. And by the way, it'll be cheap. It'll be in your doctor's office. And by cheap, I mean under $10,000, gone. No side effects. And there's 2 or 3 other serious contenders to compete with this. I kind of hope my horse wins, because that's where I got the investment. But in 5 years from now, cancer will be a chronic problem, not a death problem. Another company I was with yesterday, they figured out how to put stem cells into your cartilage and grow you some new cartilage. That's going to be cool with your knees and your joints and your hips. They're regrowing your arteries, giving you, they're going to be able to give you a new set of arteries with a 100-year warranty on it. Viruses will be gone within 5 years, 7 years. The stuff that normally kills us, it's not going to kill us. We're just going to eventually wear out. Unless some of my other friends get together and they figure out how to return us back. My Quest at Biotime last year was able to take some of your, how old are you? 58, young men. Take some of your blood or your skin and turn it into a pluripotent stem cell. It's been able to do that for years. They didn't turn into any of a couple hundred different organs. But if you needed a new liver, it'd still be a 58-year-old liver. Up till a year ago, when they did a published study with several major research institutes and universities, where they've been able to dial that stem cell back to 0. Now that's really cool. So now if they can figure out how to get those stem cells into your liver and move them around, they can give you a 0-age liver. Now, I quit drinking because my doctor suggested that I might not want to wait for that process. But those are the types of things that are coming along. Mr. Hoganson talked about the Japanese, hoping to have robots that can turn people over. Oh, they will. You really got to go see some of the cutting-edge research and stuff they're doing in robots, not just in Japan. By the way, one of the best performing indexes in the world last year in the stock market was the Japanese Robotic Index. These guys are doing cool. We've got robots walking, talking, impressing people. Coming back 20 years, we'll have computers that will be as fast, and not as fast, they're already faster, but it'll be as powerful as a human brain. They'll cost a lot of money. In 20 years, they'll be $1,000. All of the hype that we had about artificial intelligence that we kind of ignored because artificial intelligence has never shown up, even though it was supposed to be there 10 years ago and 20 years ago, it's getting there. It's getting there. Technologically, nobody in 2032 is going to want to come back to the good old days of 2012. It's going to be so far more cool in 2032. So I'm a big optimist. The governments are going to implode. That's bullish, because now we can allocate capital properly. I mean, as Charles Gobb says, he's a French patrician, the most bullish thing in the world is for the euro to collapse. I will become a great fool when the euro is gone. And he's right, because we misallocated capital all over Europe. The changes, what are we looking at? Good God have mercy. The changes that are coming because of all this is profound. Demographics are on top of it. Europe and Russia are today 22% of the world's population. In 40 years, they'll be 7%. It's an amazing time. I'm excited about it. Let's stop. We'll take a few questions, and you know, if you guys want to, there's so many other comments I can make. But if you guys want to take the questions with me, I think that'd be cool.
Thank you very much for the talk. You're actually much more much more humorous than you are in your letters. So my question is, you as an investor, how do you protect yourself from the debt crisis and the euro crisis? Where do you put your portfolio?
For the next 18 months, you hedge everything. You really just, your goal is to not lose money for the next 18 months. And if the government figures out how to deal with the deficit, you become bullish. If the U.S. puts its deficit on a glide path to being controlled in 5 or 6 years, I am as bullish on the U.S. as Mr. Hogan's. Maybe more so, if you can be. I mean, I'm really excited about that. If we don't deal with the deficit, you want to figure out how to get your money maybe somewhere else, more gold, hedge everything, and try to get through the next 3 years after that. Eventually, we come to the end of the cycle, the end of the secular bear, we come to the end of this whole debt thing. One way or the other. We either do it by getting our hands on it, or we do it by imploding. One way or the other. Okay? Just, you want to get to the other side because it becomes massively bullish. So we'll know 18 months from now whether the U.S. Congress has got the cojones to be able to deal with it. Because they're all going to have to grab hands and they're all going to have to walk off the cliff together. We can't get there just by cutting, and we can't get there just by raising taxes. It takes a massive restructuring of the entitlement program and of the debt and tax programs. Massive. It can be done. There's paths to do it. I mean, if I had a chance to vote for any of the various plans that came up, what was my mind's going blank? Simpson Bowles, which I think is probably the worst thing I've ever seen, I would vote for it tomorrow. And then I try to fix it. Because it is a plan that solves the crisis. It keeps us from hitting the wall. I'd like to fix a few things in it. But I can do that after we've stopped the car from going off the cliff. So, I don't know if that answers your question. I mean, I'm not bearish long term, but short term, I'm nervous. I'm sitting in the back of the plane, all these Fed types and people like Dunk are up in front driving the plane. And I keep sitting with a little note that says, guys, where are we going? Have you noticed there's an engine not working down here? You're making me nervous. Yes, sir.
Thanks very much, and thanks to all of the panelists, and a question for any and all of you. No mention of NAIRU as the natural accelerated inflation rate of unemployment. After all these lovely demographics, do we even worry about that term anymore?
I don't. do you guys worry about Nehru? He's saying no. I mean, it's such an esoteric BS thing that economists talk about. By the way, you know that I'm not a professional economist because they all wore ties and I don't. I'm just a country boy from Texas. By the way, my 5th book is out. It's the bestseller now, so it'll be out this next week. The Little Book of Bullseye Investing. My plug is, and the 6th book will be out in the fall with Duncan B on it. I will write it and finish it the next 30 days. Last question, and then I think Duncan's going to make us go. Yes, sir. I see that.
You've been talking to people here at Drexel, and there's a lot of us older types here, but there's also some students too. And you and all the other people who have spoken probably scared them silly.
I hope so.
What do you have to say to the younger people in the audience?
We're getting ready to enter a world of accelerated change. The most important thing you need to get is not an education, but skills. Education is useful. Now, if you get an education that gives you a skill, like engineering or math, that's good. It used to be that people would employ you, and then you'd get a skill on the job, and eventually you'd be able to transfer that skill and get better jobs. For the next 5 to 10 years, that's not going to be the case. Because my generation isn't retiring. But eventually, we're going to run through us. And in 10 years, 6, 7 years, we're not going to have enough people to do all the work. And you guys are going to be able to get a much better deal and begin to get those skills and talents.